This is the Financial News Network. I'm Christy Duffy. MasterCard beat Wall Street expectations with third quarter net income of $518 million or $3.94 per share and revenue of $1.43 billion. With me to discuss MasterCard is Mayank Tandon of Signal Hill Capital Group. Mayank, how did the quarter compare against your own projections?
MasterCard did pretty well relative to my expectations. On the top line, they delivered $1.43 billion. That's up almost 5% in revenue. I was at $1.41 billion, so it was a pretty strong revenue performance on the back of higher payment volume trends. And also on the cost side, they did much better than I expected, and they came in at $394 versus my estimate of $357, and that was on the back of a pretty nice margin performance because of lower costs.
The company's profits this quarter are partly a result of their cost-cutting efforts. Where in the business did we see MasterCard making these pullbacks on expenses?
Two specific items. One was lower advertising and marketing spend, and also lower general and administrative expenses. On both fronts, they were able to manage costs better than we were modeling, and that drove much of the upside on margins. We grew up actually very nicely, over 400 basis points year over year, and I was only building in about 100 basis point margin expansion. So from that standpoint, it was a pretty nice outperformance on their front. And I would also just highlight that beyond the cost issue, it was a good performance on the payment volume trends, which drove some of the revenue upside. They did have a nice pickup in gross dollar value of their payment volumes. They were up 8.5% versus my estimate of 5%, and that also drove some of the top-line upside.
MasterCard's operating margins were encouraging this quarter. What was your projection there, and do you expect this rate of efficiency to continue as consumer spending struggles?
Well, I think looking forward, margins will expand, but it'll be less about cost management. I think there'll be some of that. That'll drive some continued margin expansion. But I think really it's going to be more of a top-line driven story where I think the payment volume trends will get better incrementally as we move through the fourth quarter and then into fiscal 11. They did announce several new portfolio wins, and they should start to impact slowly but surely, and that should drive some revenue uptick and contribute to margin expansion. So I think it's going to be a combination of the two. Some cost controls, but maybe at a less accelerated pace, and then also incremental improvement in payment volume trends, which drives some revenue upside, and that should also contribute to margin expansion.
And it was said on the call that litigation with the Justice Department is not anticipated to have a significant impact on earnings. However, can you offer an estimate on what exactly that impact would be?
I think at this stage it's very early to get into any specifics. Again, I think I'm sort of in their camp where the impact would probably be very manageable, but it's really hard to put a number at this juncture in terms of what the impact would be. But I think we're comfortable at this stage that it'll be marginal. It's really tough to quantify at this time. The biggest issue that remains the debit interchange regulation, which, we've talked about it, and our sense is that it'll be a manageable impact as well in terms of the impact to MasterCard's debit portfolio. But that's something to watch, and we'll start to get some data points on that starting in December as the Fed establishes the ground rules related to debit interchange regulation.
Well, you mentioned the impact from government regulation. I remember from our conversation about Visa, you said that the impact will be manageable, but can you quantify an estimate on that yet?
It is early, but there we've tried to run different scenarios, and given that MasterCard has much lower exposure to U.S. debit than Visa, we think the impact is going to be even less for MasterCard, and we've estimated our base case impact to be about 5% hit to earnings, but even that might be aggressive. But the ground rules haven't been established yet, so that's our best guesstimate at this juncture. The less than 5% impacted MasterCard's EPS in fiscal 12.
And MasterCard also completed its acquisition of DataCash Group for $526 million, closing on October 22nd. What are your expectations from this expansion?
Well, I think the strategy behind DataCash is really to gain a broader footprint into e-commerce, which continues to be a very fast-growing channel worldwide. And this is their way to really expand the footprint. So I think, again, we'll have to see how MasterCard executes, but we like the deal from the standpoint that it gives them a presence in e-commerce, very similar to what Visa did on the CyberSource front. But it's an important channel. It's growing very fast around the world, and the acquisition makes strategic sense. Now the key is how do they execute on that, and we'll be monitoring that as we go forward.
All right, thank you, Mayank. For further earnings updates, make sure you're subscribed to our YouTube channel. This is the Financial News Network. I'm Christy Duffy.